You ever see a company completely change who they are and then post financial results that just seem impossible? Well, there's a Japanese firm that did exactly that. They've overhauled their entire strategy, and they're putting up numbers that are making everybody do a double take. Okay, let's get into this.
No, that is not a typo. 1,156%. That's the year-over-year revenue growth that this company, Metaplanet, just posted for the first half of 2025. I mean, what an absolutely mind-boggling number. So what in the world is going on behind the scenes to make that happen?
All right, to even begin to understand that headline number, we've got to look at their financials, because this isn't just growth, it's a complete jaw-dropping turnaround. We're talking about a story that goes from deep, deep in the red to, well, stratospheric profits.
Okay, so check out these numbers. It's just wild. In just a single year, revenue didn't just grow, it exploded. From 168 million yen to over 2 billion. But here's the real kicker. Look at the bottom line. They went from a net loss of 176 million yen to a net profit of over 6 billion yen. So you've got to be asking, how on earth did they pull this off?
Well, the answer is, they did something pretty radical. Back in 2024, Metaplanet decided it was no longer a regular company. It was going to become a Bitcoin treasury. And this wasn't just, them dipping a toe in the water. This was a full-on change to their corporate DNA.
And you can really hear their single-minded focus in their own words. This quote, it says it all. They're making it crystal clear. Forget everything else. Our one job, our core mission, is to get our hands on as much Bitcoin as possible for the people who own our stock.
But how, right? How are they actually doing it?
Well, they've built this powerful engine for accumulation, and they've given it a name that's just as ambitious as the plan itself, the 555 million plan.
To see if this engine is actually working, they use a special metric they call BTC yield. So think of it this way. The company sells new stock to get cash and then uses that cash to buy Bitcoin. BTC yield is the report card. It measures whether the amount of Bitcoin per share is still going up, even with all those new shares out there. It's how they prove they're creating real value.
And that leads us right to the next piece, BTC gain. If BTC yield is the growth rate, BTC gain is the actual treasure. It's the tangible amount of new Bitcoin that's been added to the pot for shareholders. And in the second quarter alone, their BTC gain was, get this, over 5,200 Bitcoin.
And just to give you a sense of how much they've ramped things up, they recently took their old plan, the 21 million plan, and basically threw it in the trash. They replaced it with the supercharged 555 million plan. The name itself just screams a whole new level of ambition.
And here's what that looks like. I mean, just look at the difference. The old plan was targeting 21,000 Bitcoin by 2026. The new plan, they've cranked that target all the way up to 100,000 Bitcoin. They're not just trying to make a splash. They are trying to drain the entire pool.
Now, this whole crazy strategy, it isn't happening in a bubble. Metaplanet is positioning itself very deliberately to ride what could be a massive macroeconomic wave, and it has everything to do with interest rates.
The basic economic idea here is actually pretty simple. When interest rates go down, money gets cheaper to borrow, and that cheap money tends to flow away from safe, boring things like government bonds and into assets with higher potential growth and higher risk, like Bitcoin.
So let's look at the US, for example. Right now, the Fed funds rate is sitting at 4.33%, but a lot of analysts are projecting that it could start falling, maybe heading down towards 3% as rate cuts begin. And this potential drop, well, that's the powerful tailwind Metaplanet is hoping to catch.
So, what could that mean for Bitcoin's price? Well, if rates do fall like that, analysts are watching for a few key things. They're looking for Bitcoin to find a solid floor above $125,000, maybe make a run for $150,000, with some even targeting an ultimate goal of $200,000. Now, for a company whose entire identity is buy Bitcoin, you can imagine what that would mean.
Okay, so you've got this super aggressive strategy in this really volatile environment. So if you're an investor watching all this, what do? This is where we hit the crossroads of risk and reward.
Analysts basically see two very different paths from here. In the bull scenario, the stock could bounce back and start testing price targets all the way up to 1,450 yen. But, and this is a big but, the bear case is very real. If the stock breaks through key support levels, it could fall all the way back into the 700s. It's a huge range, right? And that just shows you how high the stakes are.
So with that kind of crazy volatility, how do traders even think about getting in? Well, some are looking at a classic strategy to try and manage that risk. It's all about buying the dips, but doing it in a very methodical way.
And here's what that kind of strategy can look like in practice. Instead of going all in at one price, an investor might decide to scale in. You buy, say, 30% of your position in one price zone. A little more of it drops further, and so on. The whole idea is to lower your average cost, which cushions you from some of the risk and puts you in a much stronger position to profit if and when the stock finally rebounds.
So, at the end of the day, what we're watching here is this incredible experiment unfolding in real time. Is Metaplanet a pioneer, writing a bold new blueprint for how companies should handle their money? Or is this just one of the biggest, most high-stakes gambles we've ever seen? A bet that either soars or crashes right alongside the price of Bitcoin? For now, the answer is still being written.